Hello, fellow traders. 'Tis I, the Rumpled One. It is November the 1st. The year's 2018. Let's talk trading. Whole trading. Now, the thing is, when we talk about trading, many times we talk about pieces of trading. We talk about the entry, probably more than we talk about the exit. Some people do spend a lot of time on exits, but do we ever really look at the whole trade? I mean, think about it. After the trade, all we really focus on is did we make money or did we lose money? But what about the whole trade? So this month, your assignment is to think about the whole trade. And as I go through the charts today, maybe I can let you in on how I look at it and what I'm talking about when I say the whole trade. And part of the whole trade, of course, is the money and risk management aspect of it. So, we have it stated pretty simply. We say risk is the dollars or the percent we're willing to lose. We all know that. So, if you're willing to lose a certain amount of money, you know, that's your risk. And if you're saying, well, hey, I think the stop loss should be at this spot on the chart, and then you calculate your position size. Or if you say, you know what, I just want to trade one lot at a time, and that's how much I'm trading. And so then you know where your stop loss is in terms of your pip each and every time, because it's going to be the same. And so here we've got a brand new month, right? Right here, we're looking at brand new month. And so far, we entered that lower wick zone from the previous month and we shot right out of it. Okay, and we're 93 pips off the low. We're 78 pips above the bottom of the previous month. Now 79 pips above that candle. So you can see here, once again, how the wick zone works, and price doesn't like staying in the wick zone. So from a whole trading aspect, all we look at is we look at the chart and we go, well, price doesn't like staying in the wick zone. Price is in the wick zone. So just sitting back, we say, hey, there's our entry long. Here's our entry short. And we'll just see what happens. Now, part of this is also looking at what I like to call the big candles. And you see here we had a big candle down, and it took it a couple months, but it covered that big candle. Well, we've got a big candle down here, and it took it a couple of months. You can see here we had a big candle, and we covered it right here. Okay, and we had a big candle there, and we covered it there. But you see, we also have a big candle here that hasn't been covered. So that's something to look forward to happening. And so weekly, we can look at this again, and you can see here, big candle, and that was pretty much covered. Not quite, but you see we had a big candle down, so big candle up, couple big candles up, took it a little bit more down, big candle down, looking for a big candle up, and you can see we're more than halfway there on the week. And since we're on the weekly chart here, we see we still have two gaps that haven't filled. Okay, and today is Thursday, so we've got Thursday and Friday left. Maybe they fill, maybe they don't. So once again, from a big picture perspective, the whole trade is that we know in the case of a wick zone type trade, where our entry is long, where entry is short, we look here, big picture, we're saying, hey, this candle needs to be covered. Now, it probably take maybe 2, maybe 3 weeks. Like here, it took 3 weeks to cover, and it just might cover. Now, if it crosses below this midpoint here at 41, that could be a nice place to exit that trade, take your money off the table, and maybe you just might want to wait and not even trade this until it gets maybe back into a wick zone. Or there might be another horizontal line cross somewhere. So for example, on the daily here, we exited the previous day's low by about 4 pips. So that was basically, a scratch trade. We exited the high. That was 22 pips. So that was a nice trade there. And just taking those simple trades. Now, look at this. Look at how many are over 100. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 over 100. But notice here, the dollar yen is actually almost the laggard, but the Canadian franc seems to be the laggard. And but we've got euro yen coming in at 115, which is what, 3 times that. So once again, switching from the dollar yen to euro yen based on the volatility has paid off. Because see, once again, looking at the whole trade, not just the entries and the exits, but looking at the whole trade, from looking at the whole chart, and you can see right here, we got a big candle that needs to be covered. And looking at the buy zone, there was a short 3 hours out of the gate, then there was a long, and the rest was history. You can see here the bias. We had a pivot point here, which was 12 pips target away from the entry here. So there was a nice trade to be had. So even if all you took was your 12 pips, you had a winner. If you took part off and let the rest ride, you can see here, you have a bigger winner. And that type of exit, by banking part of the profit, maybe half, maybe 80%, depending, and letting the rest ride, you can see how you can actually have made more money. On the other hand, if you took it all off here, you see you might be kicking yourself. So by, leaving part of the trade on, taking part of the trade off, moving your stop loss up to, like break even +1, that's like the worst thing that can happen. So here, maybe you took half off, and where did we go? If we had a low of 89, we had here, maybe you triggered in around 87. So it came within 2 pips of that stop, turned around, and people say, oh, that's a hairy hindsight trade. No, it's not, because we do it every day. We're just describing what happened. So, but once again, looking at the whole trade, not just the entry, not just the exit, not just the target, but looking at the whole trade, big picture, as opposed to just looking at the pieces, because the whole is greater than the sum of the parts, right? But if all you do is focus on entries, or all you do is focus on exits, you're not doing the whole trade. And, people try and tweak their entries, but we all know, from Mark Douglas and all the rest of them, any individual trade could go your way or go against you. And the reason you entered doesn't matter. And that's just such a hard pill for traders to swallow, especially new traders that want to come in and, using that MACD indicator, and this is really funny how things go circle around. when I started trading and I learned RSI2 from, let's see, I think his handle was Larogi at the time. And he taught me RSI2 and I learned it. I became really good at it and took it to the next level. But it's a squiggly. Well, there's somebody did a seminar last night on RSI2, and I don't think it was my buddy Larogi. And it's just like, and then somebody else with the slope angle indicator, and somebody else, preaching the MACD. And I see this stuff over and over again, almost every day. Somebody's trying to sell me their whiz bang system. And, just to set the record straight, I don't sell these things. These things are free. Some of them, if you send me a donation, I send you indicators just to say thanks. Because I just don't believe, one, I don't want a business selling indicators. And two, I just don't believe in that model when it comes to trading. People helped me, so I have to pay it back, pay it forward. I think I've paid it back and paid it forward in all the code that I've left out on various forums. But some people begrudge me the few donations that I get, and it's just amazing where there's people that have created this huge traditional trading industry and they're selling books, tapes, seminars for thousands of dollars, but yet they begrudge me when somebody sends me a $50 donation. It's just beyond sense. It's nonsense is what it is. But okay, I've got off subject. Let's get back to the point here. Looking at the rat, once again, a whole trade aspect. We know from statistics that price usually is going to be 20 pips or more off the high of the day, and it's going to be 20 pips off the low of the day when it closes. So what we do is, in this case, we're trading away from the current daily high and we're trading away from the current daily low at the appropriate time. If you go back to the buy zone, what are we doing with the buy zone? We're trading away from the open. So you see, in this case, we're trading either away from the open long or away from the open short. In this case, we're trading away from the daily high, which is short, and away from the daily low, which is long. So, but we also know one thing about the rat. You have to pick a color. Either you're a green rat or you're a red rat. Otherwise, you're a Yale student, because then the statistics will work against you. But if you always pick one direction to trade, you're going to put the odds in your favor, because you could be long when you should have been short and vice versa. So that's why you have to be a red rat or a green rat. And the pivot, once again, hold trade, we look at it, we know based on statistics that pivots get covered. They miss very infrequently. Okay, and you can see here, it looks like we're going to go back and try and get this pivot out. It's 105 pips away right now. Price action, big picture. Once again, we know, especially three balls, we want to trade away from the three balls. Usually let that candle close. Even here, you've got a green at the line. Here, let this candle close, red at the line, and there's profit. We know this. It happens daily. Crossing the lines with the candle color, we see the price action every day. Hold trade, wick zone. We know, as stated before, price doesn't like staying in the wick zone. You see it happen every day. Holo setup. We have highest opens, we have lowest opens. And this is kind of interesting here. Where do we have it? There we go. Refresh the page, made a highest open, made a high. Here, reverse off that lowest open. Money to be made. Inventory reduction. Once again, horizontal line cross, simple, hold trade, look to take a handful of pips. We're not looking for the home run when we trade these. Once again, more horizontal line crosses, and I'm running out of time. So just remember, hold trade, because it's not what you trade, It's how you trade it. So drain the banks this